Good afternoon, traders. Russell Sandiford here for your Easy Markets weekly market outlook. Well, last week certainly finished with a bang, particularly for the Kiwi dollar on Friday, seeing that Labor victory, just capitulating the Kiwi dollar with the unknown outcome and that lingering result finally coming through. But that actually gave us some clarification that the system there and the outlook for the Kiwi dollar is potentially not good with the plans from Jacinda's team. So the Kiwi still lingering under that 70-cent level might be an interesting one to settle down a little bit now from what I can tell. I still favour that 68.50 price level being quite a big magnet for the Kiwi dollar. But the other big story late last week, of course, was the US tax reform story. That really put a boost behind particularly the US dollar and the dollar yen. The risk theme shot up and the Dow slammed through 23,000 and the dollar yen pair slammed through 114, albeit briefly. Now that has reversed a little bit to start this week after the Abe win announced yesterday, the resounding victory there out of Japan for Abe. It does mean a continuation and the lower rates for longer potentially there with Abenomics continuing, and that should be a big story for dollar yen. For mine, I think it looks cheap here and is pulling back into the buy zone around 13.30. I'm not sure where the buyers will step in, but I'm certainly not going to be waiting too long on that trade because for mine, there's two major things affecting the US dollar at the moment, and one of them is that new Fed chair position. The other, though, the big story is that US tax reform progress. When we get new developments in that department, the bottom line for the US dollar is dollar yen should really be at about 115. So being at 113.25, 113.30, again, is far too cheap in my opinion. We do have GDP for the US dollar at the end of this week, but really the big story is going to be around that new Fed chair, likely to be Powell. Now, Trump's decision, he did say in overnight action there, he did say he's very, very close to announcing the new Fed chair. Again, likely to be Powell. His attitude and sentiment in the market is certainly a lot like Janet Yellen. So it's kind of a rates are lower for longer sort of theme. No real shock waves to be expected there in the US dollar. Gold may get a bit of an uptick with his appointment. But again, guys, for mine, it's really about that tax reform story. Donald Trump, in my opinion, really does need a win in his presidency, a big win. And frankly, that would be a big win. So look for that to play out in the media and the news wires in the coming days and weeks. And that can, again, be a massive lift across the board for treasuries and the US dollar. Now, where's the action this week? We're really staring down the barrel of a very knife edge week for a lot of pairs. For example, tomorrow we've got the Aussie CPI. That inflation number that hits just on the Asian Open tomorrow can be pivotal. The Aussie leaked and dribbled down to 78 cents again yesterday. As we're trading here today, it's not much higher off that level at all. Now for mine, look, the CPI data, the inflation data that's expected is supposed to be a bumper number of 0.8. Now, if that positive data piece does come out tomorrow, then Aussie dollar's back at 79, 79 and a half even. But look, afterwards, potentially over the coming weeks, you may then see a reversal again and a draw back down towards 78 and a half as that US dollar strength theme may kick in again and play out in the Aussie against the greenback. Now, shifting gears, of course, to tomorrow night as well in the US session is the dollar CAD becomes very interesting. Bank of Canada surprised the markets recently with a really quick acting rate hike. We all know what that did to dollar CAD. It really fell out of bed sharply. Now we're back to around that 126.25 level as we speak. The bottom line, traders, is tomorrow night's BOC are not supposed to be moving on interest rates. They're expected to hold interest rates firmly there at that 1% level. What that could do for dollar CAD is see the US dollar strength come back into action and lift dollar CAD back, in my opinion, towards 127.50, 128. That may be the trade of the week, but it could be overshadowed and outplayed by the euro. That is the big event this week, the ECB Thursday. Of course, 10:45 p.m. for the Sydney siders. That is the ECB interest rate. And then the all-important 11:30 p.m. press conference. Expect wild volatility on the euro. It's just 10 pips above that 1750 level at the moment. It's absolutely on a knife edge because, look, the bottom line, if you don't know this story, they're looking to unwind and taper out of their bond buying. So instead of devaluing the euro, releasing that, and the euro could lift very sharply. We could be at 119, 120. However, the main theme that we're seeing on the I guess rumours and data points is that that's not how it may play out. The risks for mine do seem skewed to the downside. So from 117.50, anything can happen. If they announce basically a slow unwind of their bond buying program, that will have a negative impact on the euro. And I don't think we've seen this play out very much at all. It's a very crowded trade, that long euro dollar trade. So for mine, that will easily be the trade of the week, and that is short euro against the greenback. That is a very interesting play because you've got the twin forces of the ECB jolting that euro lower, as well as the potential US dollar strength kicking in, like I've been saying. If you guys need a hand with your trading though, you can always reach out and get your dealer access here at Easy Markets.